Welcome to Accounting Essentials, Master the Basics in 10 Days. If we're just meeting, I'm Casey, and today we're going over budgeting and forecasting. Now, this is a really exciting topic because you get to look at the financial statements when creating your budget and your forecast. And if you haven't watched my videos on analyzing financial statements, you might want to go back and watch that. So into the super boring textbook definition that I wrote, which means get out your flashcards and your pen and write this down because you're going to want to know this key terms. Budgeting is creating a detailed financial plan that outlines expected income and expenses over a specific period, often a year. So when I say budget, I want you to think of plan. When I create a budget, I want to stick to the plan. So take out your phone and type in Ulta Beauty 10K, click on the table of contents, and then click on your income statement and bring that up. So as you can see, the income statement is divided into typically two sections, revenues and expenses. And what we're looking at right now are actuals. This is what actually happened at Ulta Beauty. And the budget is what you expect to happen. So for example, we're looking at the first 13 weeks of 2023. So Ulta is going to create a budget most likely for the year. And you don't want to go over that, baby accountant. So let's keep moving. Flashcard time. Budget, a detailed financial plan that outlines expected income and expenses. And what is very common amongst many companies is an expense budget. And that's a plan for expected expenses. And you can look at Ulta Beauty's income statement in the expense section and see what actuals are at this time. For example, actuals are currently $692 million for selling, general, and administrative expenses. So these are actuals. And the budget, for example, for the year might be something like $800 million. And let's say you're preparing your financial statements and you are in Q3 of the year, and you can see that selling, general, and admin expenses are up to $790, and you only have an $800,000 budget. It's your responsibility as the accountant to figure out what is driving those increases in expenses. And if you go over budget, make sure when you're preparing your budget that the following year you can see if you can get your budget increased. So your question is, why does Ulta care about a budget? They have millions and millions of dollars and they can raise as much money as their heart's desire since they're a publicly traded company. Well, Ulta uses budgeting to plan and control its financial activities. It wants to set sales targets, i.e. they want to move a boatload of products off their shelves. For the expense section, funds are allocated for marketing. And finally, they need to know, how much to spend on makeup inventory, especially during the holiday season when people like me and you may like to get super glammed for holiday parties. Now know that when you look at the Ulta income statement, we are seeing a very high level overview in regard to its expense accounts. But I am telling you that Ulta plans its expenses at a granular level, budgeting for marketing expenses, rent, and other operational expenditures. For example, right here, you can see selling, general, and admin. I bet you 500 granular accounts make up this node of selling, general, and admin expenses. So I challenge you today to Google your favorite Fortune 100 company and take a look at their expense section of their income statement and compare accounts. And this will get you familiar with what kind of items a company will budget for. Now, moving on to forecasting. Flashcard time. When I say forecasting, I want you to think your best estimate because it's a forecast. And we all know how well the weather girl forecasts the weather. Flashcard time. So forecasting involves predicting future financial outcomes based on historical data and assumptions. So what does that mean? So let's say you got your first accounting paycheck and you want to invest that money in a single stock. So what you're going to do is you are going to Google the companies, read their financial statements, and you're going to forecast on if this is a good investment. Because remember, to forecast is to predict future financial outcomes based on historical data and assumptions. Historical data meaning the financial statements, and assumptions meaning something as simple as, do you believe that this is a good investment? And most likely what you're going to look at is a revenue forecast, which is an estimate of future income, meaning I'm going to guess that you're not going to invest in a company that's making manual typewriters because it's probably on its way out. So you might ask yourself, why would a company create a revenue forecast? And that's because this predicts the company's future income from sales, considering factors like market trends and competition. So you may ask yourself, okay, why do I care about budgeting or forecasting? Well, most likely you as an accountant, your bonus is going to be tied to how great the company is doing that year. So it is in your best interest to hit your targets on budget and forecasting. Why is forecasting helpful? Forecasting helps Ulta anticipate its financial future. It relies on historical data, market analysis, and assumptions to make informed predictions. Ulta may use forecasting to estimate how makeup sales will perform in the upcoming year, considering factors like consumer demand and marketing efforts. For example, let's say Ulta had the exclusive right to sell Dyson hair products. If you're into the hair scene, you know that Dyson is like the gold standard hair goals. Many girls want it. It's way too freaking expensive. If you're watching this and you're a dude and you have a girlfriend, that is an awesome gift, by the way. So let's say Ulta has exclusive rights of the product and it is holiday season. So Ulta knows that they are going to sell a crap ton of Dyson Airwraps. So they need to analyze like, okay, we predict an increase in sales revenue for the Dyson Airwraps since we have an exclusive rights, but we need to take into account that when we're creating our budget, we need to increase salaries expense because we're going to make sure that we have plenty of staff in the store, that those girls don't get annoyed and just walk out of the store because the lines are too long. These are real world examples of why it's so important for a company to create a budget and to be able to make forecasting predictions. Now, I want you to write down why budgeting and forecasting are important for 3 key reasons. Financial planning. Budgeting provides a roadmap for financial decisions, helping the company allocate resources effectively. Goal setting. Budgets at Ulta to set realistic sales targets and expense limits, ensuring that the company stays on track, i.e., ensuring that you get your bonus so you don't go over budget. Risk management. Forecasting helps the company identify potential challenges and plan for them in advance. And this is so important. I know it sounds scary, the term risk management, but let's say a certain product line at Ulta is winding down. They want to make sure that it is a smooth transition. I'm trying to think of a company that, like, for example, Makeup Geek Cosmetics was a company that wound down. While they weren't carried in Ulta, they need a plan to get it off their shelves. So you made it to the knowledge check. What is the primary purpose of budgeting? A, predict future financial outcomes. B, create a detailed financial plan for expected income and expenses. Or C, to analyze historical data. The answer is B, to create a detailed financial plan for expected income and expenses. Which financial practice involves predicting future financial outcomes based on historical data and assumptions? A, budgeting. B, forecasting. C, auditing. We didn't even talk about auditing today, so you better not have said auditing. It's B, forecasting. Why are budgeting and forecasting important for Ulta? To predict future sales accurately, to plan and control financial activity, set goals, and manage risks. Or C, to analyze historical financial data. The answer is B, to plan and control financial activity, set goals, and manage risks. If you haven't picked up Accounting Essentials, Master the Basics in 10 Days, it's linked below.